that will not be an allowed expense in that year of operation. It has to be spread over 3 years. And again,
but this is capped at 30%.
And again, this is capped at 30% at the earnings before interest and tax. So assuming you are dealing with a large transaction where you had borrowed up to 1 billion shillings. Again, if I use the large amounts, and we are saying that the exchange rate was 109 when you borrowed, and now it is at 129. You can imagine what we are saying. So we are simply chasing away investors, and anybody who's trying to bring in foreign currency. Again, we are defying what we are saying. We want to attract investors, and on this other side, we are taking away their rights. So those are two, and maybe if I'm allowed, I can proceed with another one.
Yes,
yes,
the final one.
Yes, a final one. I will talk about. There are two other interesting ones, but I could speak of one that talks about, again, on investors. We used to have, or we have, organization we call branch companies, where a company from a foreign country can come and set base here. So taxation was up to the point where the profits they have made, 30% of that they can they pay taxes for it. Anything above that they can repatriate. But now they're being told, before you repatriate, you have to ensure that you pay additional tax on the income.
You pay taxes first in Kenya.
Exactly.
Before you repatriate your profits.
That was mandatory. You have to pay you have to pay your taxes after from the profits that you've made. But before you can repatriate, you have to pay further tax. So that calls in for double taxation.
But because this is a conversation that has been held, that has been there in the past, whereby, and I think Kenya, the National Treasury is borrowing so much from the American system, whereby the American law dictates that before an American company pays taxes in a foreign company, they first pay their obligations, their tax obligations to the American government first, and then they pay the remainder to the country where they are domiciled. And the argument has always been that you have companies, for example, American companies in Kenya that are doing business here in Kenya. They're making a lot of profit, but instead of paying equal profit, equal taxes to the government of Kenya where they are domiciled, they are paying so much profit to American government as opposed to the Kenyan government. And so this bill here seeks to deal with that situation.
In rebuttal to what you're saying, our economies are totally different. The American economy is a larger economy. Our economy is more of a developing economy. So we are at the mercy of the investors who are coming in. If we make it unfavorable for the investors to do that, they will go next door. And remember, what do we want? We want to grow our economy. We want more foreign currency to come in.
Actually,
we can't
the target
brag.
is 10 trillion shillings.
Exactly.
By the close of this year.
Right, 10 trillion shillings. So if we behave like how the Americans will behave, taking care when they're trying to take care of the investors, then we'll completely be losing focus. Yes, yes, that would be my submission on that.
Moturi, do you agree with lawyer Akamwara?
Yes, I do agree. The issue here is actually the deductibility of that particular amount within a certain period. Previously, there was 3 years when somebody is allowed to claim that, but now it has been restricted to 3 years. We are, as the institute, we are looking at it and say, if that has to be there, then that period should be extended to 9 years. Yeah, and the other thing he has talked about investment. Yes, the country need to promote investment all around. Now, I can add to what he has said. This is what we call capital deduction, where an investor, once he has invested outside Nairobi, is allowed to deduct that capital expenses as he works on the taxable income. Now, the current bill, and I think that is section clause 9.
Quickly before we take a break,
where they have said if you've been handling a certain business in Nairobi, and you start the same outside Nairobi, then you don't qualify for that kind of deduction. So that is going to affect investment decisions in this country for most of the, because if you have to go and start a completely different business who does not relate to the business you are doing, that will also, so we are suggesting that it should be allowed the way it has been allowed, which is about 200% and 150% outside Nairobi.
And I wanted to add that, and you see that helps in the devolution exercise in itself, where we are saying we want to have as many organizations that relate to a certain institution or to a certain region going to that area. If you're going to Mumias where sugar is being grown, we want the factories to go to that side. If you're talking about fishing, we want the industries that relate to fishing to go to that side, because what the revenue authority was doing, it would give an incentive of double of the value of your investment. But now if you remove that and you go ahead and even tax the repatriation of your profits, it means that you're discouraging investors to come in.
Very good. I mean, when we come back, I also want to hear your thoughts around the introduction of VAT on insurance compensation in relation to assets which input VAT has been claimed. I also want to hear thoughts whether we are also talking about double taxation here. And also remember, the reason why VAT was removed on compensation was to help people and encourage more people to go into savings. Now, what we're asking is whether this is likely now to do the opposite. So I would want to hear your reactions to this. Well, if you're just joining us, you're watching Biz Check live from Broadcasting House. We are discussing the finance bill, among many other issues, and of course highlighting some of the less talked about issues that are contained in this document. My name is O'Brien Kimani. We're taking a break and then we're back. Well, very well. Welcome back. You're watching Biz Check live from Broadcasting House. Our conversation is on this document. It is green in color, printed by the government printer. It is called the Finance Bill 2023 and forwarded to the National Assembly. What you don't know is that there are about how many pages? This is a document with about 377 pages. This is a document that has generated so much reaction. It's green in color. It has always been green. I think I need to find out why is it in green. And there are so many. It contains about how many bills? It contains about a number of proposals. And so this is what we are discussing this morning. This is a document that is going to be debated in Parliament, and if it is approved in its current state, then it's going to have far-reaching consequences on your finances. And that's why we have financial experts in the studio. We have FCPA Moturi, who is joining us here to help us discuss this document. That is Evans Moturi and Robert Kamwara, who is a taxation lawyer, joining us this morning so that they can help put into perspective this document. I mean, there's so much noise out there about this document, but now it's time that we put some sense into what exactly this bill talks about. Because there are also other areas that this bill is proposing that are so good to us as Kenyans. And so we also need to touch into that in the spirit of fairness. Well, gentlemen, thank you very much and welcome back to this conversation. Before we went for the break, I wanted to hear from you, what will be the impact on the VAT on insurance compensation, and what exactly does it mean, Peter? I mean, Evans.
It's okay. Insurance compensation is what you get for what to replace what you lost. Maybe in your car, you was involved in an accident, and you have been compensated.
Yeah.
Now, when you receive that money, is the objective is to take you back to where you are. If possible, you can be able to buy the same car. Or, but now this particular amount has been included in the current bill, which is under discussion. That is a taxable amount. Now, the effect of this is that even the person who's receiving that money, because that amount which was given was supposed to restore this particular to a level that it was. So that will be less by the amount that has been
and it will be 16%.
16%.
And so then this begs the other question. I mean, if, for example, I bought a house and then for one reason or the other, or let's even use a vehicle. I mean, it's got into an accident. It's written off. I am compensated by my insurer, let's say to the tune of 2 million shillings for the car, and then I have to pay 16%, which comes to is it 360? 360 or 320 thereabout. And despite the fact that I had paid taxes on the car that got damaged, so isn't this more Kamwara double taxation on me?
The same question was posed yesterday to the movers of the motion, and to their defense, I would say that there is a misconception, actually, when it comes to the understanding of the issue to do with insurance. What the movers of the bill are actually saying, in their defense to the same, they're saying that if a business has suffered a loss and a compensation is being done, when you are lodging your claim, assuming it was 1 million on the goods that are lost, so you lodge a claim of 1 million plus VAT, the additional 16% figure that is there, when compensated by the insurance company, the money has to be paid back to the insurance. So ideally, it is not meant to be a double taxation. It is a refund, because if those goods were to be sold, then there is an element of VAT input that you would have claimed.
And so the question of double taxation here,
so the double taxation does not come in. It does not come in. But it's a debate that needs to be discussed and expounded further. As you rightly said when you started, there are many good things that come in with the bill, and people have demonized the bill in itself, but we need to read it keenly, so that we don't lose focus and end up concentrating on non-issues, and when the main issues that are affecting us pass by, then we end up losing, and we all start running to court when it's too late.
I know in the past, because as I said, when we were starting this program, that every year, I mean, it is a custom that the National Treasury must table a finance bill in Parliament, outlining various strategies that the government is going to use to put in place to ensure that we raise the taxes to fund the budget. And I know in some cases people have gone to court and argued on several issues. And I know, Kamwara, you have gone to court in the past and argued about the 1.5%.
The 3% minimum tax.
The 3% minimum tax. And, and the court ruled in your favor. So the people who have gone to court, to challenge this document, do they have any legal backing?
Yes, they do. They have a legal backing, and they also have more than a legal backing only on the Act, but also on many other laws that are there. We have the Constitution. We have a reason why everybody should go to court. Number one, the main thing that most of the lawyers have used is the issue of public participation. And a good question that you asked, why this time around we are having so much public participation. What Parliament and the executive have done is they have tried as much as possible to encourage public participation. What we are yet to see is this so-called public participation, all these memorandums that organizations have put in place, individuals and even government institutions have come in the defense of their own when presenting the bill, whether this will be put into action. And they will have a reason why they will go to court, and try and fight it out. So we are here to see whether public participation will come to play. We've had sentiments that the bill has to pass as it is. That does not encourage public participation. So we are here to see whether that will come into play.
What should come first? Is this to take this bill to court, or to wait for it to be debated, to be passed, and then you move to court? What should come first?
Rightly, everybody has a right to do what he feels is right according to the Constitution. Everybody has a right to access justice. You can decide to take the bill to court, but ideally it is going to be debated, and that is the procedure. It is going to be debated in court today, to be debated in Parliament this week. Then after that, next week. If it is not agreeable and becomes an act of Parliament, and you feel go to court, you can go and fight against that.
But as it is now, because now it is a bill, it is not a law, can I take this document to court and say that it is infringing on my rights as a Kenyan, and yet it is not a law, it is just a document, they are just mere proposals?
You can go to court and debate that it should not be debated in Parliament. You have a right to do that, because you feel that...
So I can only go to court and say that Parliament should not debate this document.
But you need to have very clear grounds on why you feel that this should not be debated or should not be decided this way. Yes.
And then the courts will decide whether to grant you your prayers.
Yes.
So if the court was to decide that, can we anticipate a situation whereby courts would say this document should not be debated?
Remember, you have a right. The legislators, the work of the legislator is to make laws, right?
Precisely.
Yes. So he has a right to make laws. So debating whether it should be in and out, we'll leave it to the courts to decide. We already have
but from
matter
where you
taken by.
stand,
Yes.
As a lawyer, would we have this kind? Do we have any precedent or any jurisprudence that can be used to argue that this Parliament should not debate this document?
We already have the lawyer of the people in Parliament, in court, who has put in his petition, and we'll leave it to the courts to decide.
The courts will decide.
Yes.
Well, we are here, we are watching, and we'll definitely be analysing the situation as it evolves in Parliament. Something else that this bill is talking about is the payment of excise duty within 24 hours of closure of a transaction. Within 24 hours, within the closure of a transaction. That puts tremendous pressure on Kenya Revenue Authority to do this. Is this workable, honestly speaking?
You know, we are looking at a situation where we have perfect operating systems, in that everything is online, in that when you do some transactions, all the deductions will be done and you will be able to do them. But practically this is not the case.
That is the now ideal situation. That this bill is anticipating.
Based on the bill.
But the reality is different.
The reality is different. And these withholdings affect all Kenyans. Some don't have systems, some have systems, and they may not. Actually, any system, your taxation should be very good in terms of administration. But now this puts a lot of pressure on the Kenyans in giving that return. It's not actually practicable, and there will be a lot of even preparing the accurate records that you take to KRA might not be. Of course, KRA has come up with the systems like e-Teams, the system that is using e-tax, but the ordinary Kenyans may not have systems that will be able to meet that deadline. That deadline is to us. Yeah.
And so there will be retributions.
It should remain the way it has been up to the
what is the
20th.
Up to the 20th of every
20th of the following month.
Of the following month.
Yes, that's when you can be able to pay that. But now, and again, this one, if it has to come immediately, there is also cash flow problem. As you deduct this, and within that 24, some amount may not have come, so it will cause a lot of chaos within the business environment. Yeah.
As the Institute of Certified Accountants of Kenya, sorry about that. I'm sure you have presented your reservations about this bill to the National Assembly. Have you done that?
Yes.
Because that's your responsibility.
This is what we have presented.
What are you saying about that?
It should remain the 20th month of the following month, the way it has been. Yeah, it is something we have discussed, and we involved all the accountants countrywide. They have put their input. We have already submitted this particular document with a lot of changes which I may not be able to discuss here, and we expect that those changes will be implemented. And whichever anything we want changes, we have recommended the exact thing that we want to be done by the drafters of this particular document.
And yes.
Maybe in support of FCPA Moturi's comment, let's make it practical. For a payment to go through, if it's an EFT transaction, an EFT transaction may take up to 3 days to go through. It takes two to 3 days for a check to go through.
EFT stands for electronic funds transfer. Yeah. We must always have the public in mind.
Yes. Thank you for that. Now, in such a situation, then you can see you will be now having to be financing the coffers because you do not have the cash flow. So
you'll be forced to pay from your pocket.
You'll have to be paying from your pocket. Remember, you also have other expenses to pay. You have to pay for the goods. You have to pay for other recurrent expenditures. And it makes it very impractical to do business that way. Something I may want to touch also on the practicability of some of these things. There is the issue on the capital gains that has come into fore. Let me just read you what we brought out in our memorandum. We say that where property is transferred in a transaction that is not subject to capital gains, this is what it says, and the property is subsequently transferred in a taxable transaction within a period of 5 years, of less than 5 years, the amount has to be taxed at the adjusted price. I want to make it
and the adjusted price this time around, it will be what?
The adjusted price will not take into consideration the new price that was the property was transferred to. Let me make it practical. For example, an aging man decides to transfer, as in the form of a gift to his son, a property that he had bought some years back at 1 million shillings, but decides to transfer now after the gains of the valuation of the property to 10 million shillings. It becomes by default that the son takes the property at 10 million. Then due to cash flow issues, maybe the son has to take care of the rest of the estate, he has to sell the property. In less than 5 years, as we are saying. What the bill is introducing is saying that you have to now, if you decide to sell the property at maybe a gain of to 11 million shillings, you have to pay capital gains on 10 million.
On 10 million.
On 10 million. 1 million minus the 11 million you're selling it at. Now you can see the mischief that comes into it. They are trying to cure some mischief, but at the end of the day, the individuals are suffering. So the man who has inherited the property or received the property as a gift ends up paying taxes that
ordinarily, I mean, help us understand here. For example, I'm selling my property, which is valued at 10 million shillings.
Yes.
But I bought it when it was valued at 2 million shillings.
Yes.
If I dispose of this property today, which is now valued at 10 million shillings, do I pay CGT on the 2 million shillings that I bought it, or the 10 million shillings that I'm disposing of it of today?
You pay it on the adjusted price.
The 10 million shillings?
Yes. You get the difference between the 10 million and the
and the 10
and the 2 million.
So you pay
it's
on
the
8
that you pay 5%. Okay, if the capital gains being paid is 5%.
Yeah.
Okay, now it has even gone up. Okay, now that is what we're saying. In now an ideal situation where the transaction that was done, the transfer was being done to somebody where capital gains was not supposed to be paid, because as I give an example where it's between relatives, or in a situation where it's a divorce or matrimonial matter, then in that case you're not supposed to pay the capital gains. So now they're discouraging the transfer of properties from one individual to another in such a situation. Yes.
And so legally, that clause now can be challenged on the basis of fairness.
Yes.
And the Constitution is very clear that
yes.
Every person should be treated fairly and equally. So could this be one of the grounds that people have moved to court to challenge this document?
Yes.
On the grounds of fairness? On
the issue of fairness, because it should be on case-to-case basis. If I was to give a recommendation, we can see where the mischief is. Some people would actually just simply transfer from one person to another, or a spouse to another spouse, simply just to play around and cover some, go around paying taxes. But what you're saying now is, let the issues be addressed on a case-to-case basis, and that will introduce the issue of fairness.
Let's also talk about something that is really going to help in the tax management and filing of taxes in this country. And when you look at the Tax Procedures Act, or TPA Section 23, it talks about electronic tax records. And so the bill proposes to introduce Section 23A to empower the Commissioner to establish an electronic tax system for issuing tax invoices and keeping records of stocks. Now, in my argument, this is a welcome move, and it is going to help in the management and the filing of taxes, as well as the issues of claiming for tax refunds. And we know that the Kenya Revenue Authority owes refunds of almost 60 billion shillings, the last time I checked. What do you make of these, Evans?
The most important thing in everywhere there is the systems. There's a lot of advancement in technology, and it's very important that the KRA is leveraging on the development of technology. The issue which is bringing a problem is that in this particular bill, they are provided that if somebody is not in that system, or he has not generated an invoice through that system, then that should not be considered as an input tax. So what it means is that if all people, the majority of people may not, installing some of those systems, it costs, especially for our companies, small companies. Now, that should have been given time instead of implementing it immediately. It should be left the way it has been. Of course, they can use the system, but the issue of not allowing the input tax to be considered for the companies which have not used the tax teams. If they have not used that one, that's why there is a lot of cries out there. Yeah.
And something else which I want to hear from Kamwaro, and this is Section 18 of the Income Tax Act, and I'm much more interested on the withholding tax on rental income collected by agency. And it talks about, the bill proposes that a person who receives rental income on behalf of the owner of the premises shall deduct tax thereof or therefrom. And so are we anticipating a situation whereby now Kenya Revenue Authority is going to appoint agents to be collecting taxes on my rental, or how is this expected to work out?
This is a welcome move, and as ideally, part of the canons of taxation is it should be as easy as possible to collect the rent. So in a situation where we have large agents that collect taxes, we have the large institutions in the country that have been mandated by property owners to collect rent on behalf. It is making it simplified. Simply give us a schedule of all your clients, give us a schedule of the properties that they have, and to give us a schedule. On the schedule, tell us how much revenue they have earned. Now this makes it simple, and the tax base is widened. Ideally, the essence of this is to widen the tax net.
But why? But also bearing in mind that this bill is coming at a time when the country is going through a rough economic patch, and you have so many Kenyans who are struggling to pay rents, and sometimes they are delaying, and sometimes they are paying in installments. So how would these be calculated?
This can be easily cured by dealing on computing the tax on a cash basis. If somebody has a rental income, has a rental expense, supposed to pay rent of 10,000 shillings, and has paid an installment, only managed to pay 4,000 shillings, let it be on the installment of the amount paid. The same to the same point that you raised on the electronic tax system. It's also again a welcome move. All that we want to do is let's have it as simple as possible, because we are widening the tax base, and what we want is to have as many people coming into the net of paying VAT. At the end of the day, instead of remaining at 16, we want to be a situation where we'll be paying 12%, because the tax net is wider. And the tax base now will make it easy for everybody to come in and pay his taxes. So you will not find those who are in an upper class or those who are running institutions and companies saying that we are forced to pay so much tax.
Very good. Gentlemen, I mean, I can see, time is coming to 1 minute past 11 o'clock, and we have to bring this conversation to a close, but not before I give you, each one of you 30 seconds to make your final submissions on the Finance Bill 2023. And I'll start with Evans Moturi.
My last comment would be is that the government has a responsibility to collect the tax and incur the necessary expenses for the growth of this particular country. But as they do it, the tax system must be very convenient to the Kenyans, and some clauses which are in that particular bill, they are actually negating the policy of the government, especially the hustlers policy, because there are a lot of clauses which are touching on the clauses. Like now, for example, one of the terms is to have digital and digital superhighways. And when you bring in the tax on content, and this is actually being done, it's not my age who will start working on the contents. Of course I can do it, but most of them are the young people, the youth, which the government is supposed to support. Yes, they have said that the housing levy is going to encourage jobs, but we cannot concentrate only on the building sector or to create jobs. Jobs should be created all over, because now if we talk of, are we motivating the youth to go to the construction industry, or what are we doing? But the main thing, the housing, Kenyans have houses, institutions have facilities that to provide for. It's going to be very a heavy load to employees, especially those who have been loaded with, they have housing and they have other taxes, the disposable income. They will have more effect, negative effect, than what we expect. Thank you.
Very good. Thank you. Kamwara.
A budget has got two sides. The incomes, as we are all discussing about, where the revenues will come from, where the money will, whether it will come from debt, whether the money is going to come from taxes, or where the money is going to be coming from the parastatals. That is where the money is coming from. That is being discussed widely. But are we also remembering that we need to discuss about how the expenditure should be? We need to tighten our belt if we are to manage to finance this budget when it comes to incomes. But also the person who is spending needs to look at how he spends. So we need also to remember that expenditure has to be done right. Let's not forget to monitor the expenditure. let the Auditor General be very keen and hear the cry of the citizens that we are paying too much taxes, or we are receiving too much threats when it comes to proposals. And let it be clear that government needs also to spend the money that we receive wisely. Maybe we may save a bit more, and when we come to the next budget, we shall start with a good opening balance.
Very good. Gentlemen, this is, of course, an ongoing conversation, and we'll definitely be calling you back to come here so that we can continue to analyze the content contained in this document, and of course the debate that will unfold in Parliament in the coming days. Otherwise, thank you very much indeed for joining us this morning. Your time is highly appreciated and your insight is well received. Asante sana.
Thank you very much.
Thank you.
Well, we've been talking to Robert Kamwara. He's a taxation lawyer and an advocate of the High Court, as well as FCPA Evans Moturi, who is a tax expert working with the Institute of Certified Public Accountants of Kenya, joining us this morning to help us put into perspective the Finance Bill 2023, the document that has generated so much reaction from public to the church, to the economist. Remember, this document is coming up for debate in the Parliament next week. And also remember, on the 15th of this month, the Cabinet the Cabinet Secretary of the National Treasury is expected to outline government expenditure plan for the year 2023-2024. That will be on Thursday next week. And of course, remember, we're going to beam you all the live proceedings from the National Assembly. We'll continue with more debates on this document as time goes by. My name is O'Brien Kimani. The first hour is over. We are coming back with the second hour of this conversation, and we want to look at the cryptocurrency. Well, this is a segment of the market that is growing so rapidly, but there are challenges, and of course we shall be looking into that. I will be joined by crypto experts. Stay right here for that conversation.